The cost of electricity and gas in Singapore set to rise in the next quarter. The Energy Markets Authority says it's driven by higher energy prices and increased taxes. Still, one analyst expects tariffs to moderate even as it climbs for the third straight quarter. Sherlyn Seah tells us more.
Utility bills for Singapore households could get pricier next year. For the period of January to end March, town gas tariffs will climb to 25.23 cents for each kilowatt hour. Electricity tariffs will come in higher at 32.58 cents for each kilowatt hour. Authorities say the increase in prices is due to the upcoming GST hike and rising energy costs. A higher carbon tax, which will be raised from $5 to $25 per tonne of emissions, is also among factors. Still, there are expectations that these higher tariffs may stabilise in the near term.
What we see in the current natural gas market is that prices are fairly stable. They have been for a few months. They haven't really been impacted upon recent geopolitical tensions. They don't imply that we could expect with a high degree of certainty prices to go up further, but at the same time, they also don't suggest we're likely to see any downward revisions in the very near term.
The EMA highlights that the new electricity tariff rate applies only to consumers who buy from SP Group at the regulated tariff. That's about 60% of households. And this means that those who already have fixed price plans with retailers in the open electricity market shouldn't see any changes until they recontract.
With the fixed price plans, we lock in a fixed price, which means that we exclude the ability to benefit from any future tariff reductions as well. So it really boils down to the expectations of individual consumers, their ability and their comfort with trading off risk versus opportunity. It can pay off or it can go the opposite direction. And those conditions don't change.
For now, electricity retailers have not made any changes to their price plans. Geneco says it does not immediately plan to do so, but will continue to monitor the market for fair rates. Another retailer, Senoko Energy, points out that prices will inevitably increase with the higher carbon tax, but it will continue to offer competitive prices.